Hello, hello, hello. What's going on? Hello, hello. What's going on, everyone? Hope you guys are having a wonderful hump day Wednesday. All right. What's going on? How you doing, my friend? What's going on? All right, guys, let's check this. Okay, so a couple things are happening. As always, the market's always crazy during this time. That's why we're always making these videos around. You got the Thanksgiving, Black Friday sales, the data gonna come on. We're gonna get a Santa Claus rally potentially. We got Clover Health earnings coming up next week. Very exciting. It's like literally, who knew? If I would have talking to you 15 years ago, you think you would get excited over earnings? You would have told your little kid self would have told you to go get a life. What are you guys doing here? Get the hell off of the computer, right? But we got to make some money, right? We got to make some money. All right, so let's go ahead and I do definitely, if that's a word, have some predictions for Clover Health. I do, and I'm going to show you, and it's backed by data. We're going to go ahead and do it. Stick around. All right, so earnings recovery, small cap drought, and Fed's holding rate. We already talked about the small cap drought regarding how small caps have yet to explode and how we interpret from data that in 2-3 years from now, we do see small caps leading the way. Today, the FOMC meeting was placed as, of course, Federal Chairman Jerome Powell was hawkish. I mean, didn't change anything from his October 19 meeting. The economy is split, and I made this beautiful picture. This is Main Street. This should be us, right? I was going to put an Al Stock Trades logo right here. For all the doctors here, you could see some deviation here. Maybe there must be some type of neurological damage, right? Because the whole retail investors, and we have this beautifully groomed man by the name of Ken Griffin. So in this video, we're going to talk about these two components right now: Main Street versus Wall Street. Wall Street wants a recession. Wall Street wants Main Street retail investors and people that work to go broke. They want them to panhandle. That's what Wall Street wants. But guess what, ladies and gentlemen? Job reports are coming back at historic lows. Unemployment level is essentially low. Job market is hot. We have the GDP coming in at 4.9%. I mean, the economic form is hot, man. It is doing really well. Obviously, Canada and other areas around the world ain't doing so well, but the United States of America is open for business. And who would have thought, with freaking over 5% federal funds rate? Can you believe it? So that's what we're going to talk about. Because if you look at the fear and greed model and analyze all the fear going up and down, oh my God, what emotional investors we are. We can see that now we are fearful. People are fearful. And the reason why this is important is because the transition from fear to greed is great. Because when we transition from fear to greed, we make lots of moolah. Lots of money gets made in this time, right? So you can see here as we go down here, it's that transition point from fear to greed where you make that good money. Look at that. Fear to greed. You make that good moolah, right? So what do you think of STEM? I don't know what the company does, but if we go ahead and open up our DCF here and type in STEM, it says here it's worth $3.89, currently at 3.3, and you can do some more investigation to look at the intrinsic value. I would need to do some more, but what I do know is we are definitely in fear mode right now, definitely in fear. And if you were to analyze the fear and greed model below 10%, you can see in the next 1 month to 2 months, we are going to expect some form of potential downfall for the market temporarily. Again, this information is for your, those day traders out there that want to go in and out. But overall, 3 months and after, we should be experiencing some positive gains, which could indefinitely set us up for that Santa Claus rally Wall Street has yet to talk about, number one. Number two, it could also, we also have to, on the back burner, talk about tax loss harvesting, because potentially, ladies and gentlemen, we may get some tax loss harvesting happening either in November or December, which could add some down pressure in the market. Wall Street's sneaky. They used to tax loss harvest in December, but you goddamn retail investors want to learn more about stocks. Now they're doing it early as November. So, sometimes even earlier, God knows. Palantir earnings, pre-market tomorrow. Definitely want to see what's going on with Palantir, especially their government revenue as well. I am a shareholder of Palantir. I ended up purchasing some in the 7 regions. Drink my cardamom coffee because I'm so bougie. I add cardamom here, right? So let's go ahead and move it forward here. So this is a beautiful graph that talks about year-over-year earnings growth. We have the S&P 500 companies on average. We can see that we went from negative growth to positive growth. As you stated from before, many people, we're going to have an earnings recession. We're going to all die. That's it, guys. Sell everything, go back to rocks, and go live in caves, because that's it, guys. The market's about to crash. That's what you would get from those prominent YouTubers, right? Just sell everything, go live in a hut, and we're about to go in a recession, and you're about to lose the shirt off of your back. But as you can see here, we are actually positive on the earnings now. We were somewhere in an earnings downfall. As you can see, we had some quarters of earnings growth here, decline. This was COVID, and then we had an explosion, and then we had a destruction, and now we have a little bit increasing. So who knows? We might go back to going down. We don't know. But overall, if we were to analyze this data and look at all the times we had at least 3 negative quarters of GDP going to something positive, we can see the stock market was somewhat positive. And obviously, this is fundamentally driven. Now, granted, intrinsic value-wise, that should make sense. Fundamentals should drive stocks. But if you were to look at the probabilities, it was actually 60-70%. What does that tell you? That means the market is manipulated. No shit, right? I mean, come on, right? Right? But this data shows you how markets can be manipulated. Even then, as we know, if we have an increase in earnings, then that should lead to stock market gains. All right. Now let's go ahead and turn so if we remove that bad month coming after that bad month, remove that transition point, which is what institutional investors, I believe, start loading up. If we remove that and we focus in on the data, then we could definitely see 1 year, 2 years, and 3 years, we're in the positive territory. So it seems like 2025 and 2026 may be a great way to start the year in terms of the stock market. So we may be in some tumultuous times. Post 2026, things may start getting a lot better, to where you're going to be coming on here and you're going to be basically putting rocket ships under rocket ships, and you're going to say to the moon like faster than you can breathe, okay? But right now we're in a very fearful moment, and that's the time to make the most money so we can buy stocks from dumbasses of the past that lost their shirts, and then there'll be new idiots that come in the market. And then, ladies and gentlemen, the people that are watching this, you guys are going to be so informed that you're going to sell to those morons, and then the cycle continues. It's always like that, right? Okay. So that is what I had to say in regards to the position of, the analysis when it comes to the earnings growth. In terms of small caps have not fared well. And if you analyze this, I don't have the data here. I should have put it. My apologies, but I have it in my mind. Just got to retrieve it really quickly here. So small caps, what we're looking at right now, it's a catch-22. We have entered a negative technical analysis territory on the Russell. We haven't hit the Russell. Actually, you know what? I'm sorry. I don't want to cheat you guys. I definitely don't want to cheat you on the data here. So let me just give me a moment and let me as I'm getting the data here, I'm going to put on some nice acoustic cinema for you guys. Please wait. All right. Getting the data for you guys. I don't want to cheat you. That's right. Okie dokie. Let's see what we got. Oh. All right, here's the data. So again, my apologies. Again, I don't want to cheat you guys. I want to, make sure I get you guys the data. I mean, I can tell you the data, but it's just, God gave you two eyes, right? So it's good to see the data, right? So let me drink some coffee. So we're nearing some form of a drought with small caps. As you guys know, small caps, a lot of stocks haven't hit their 52-week highs, especially Clover. Like, wow, right? Talk about a 52-week high. Don't you miss that? So number of days since last 52-week high, it's been essentially 498 days. Now, if you go to the 1980s to 2022 and look at the number of days until the last 52-week high, you can kind of draw a line in the average, which is kind of around here, right? Around here, which is why, I was pretty bullish in June and July, because we're about to hit our good old 200-day moving average, and we ended up doing that, but it wasn't enough to get to that 52-week high. So if you look at the two aberrations and two extremes, you can see the 528 and 568. And you have to ask yourself, when did that happen? So maybe I can have some, historical context. If you go here, it was the dot-com bubble crash. And then if you go down here, it was the 2008 great financial crisis. So if we were to just take the greater number, the 568 days, and add it to, and so take the subtraction here, it's already been 498 days. Definitely one of the longest streaks in the index's history. I mean, guys, remember, you are not in a normal market right now. For all of you saying, man, this sucks. Yeah, guys, this sucks. This sucks. This definitely does. But that's why I said great money was made in 2000. Great money was made in 2008. And ladies and gentlemen, some bomb-ass money is about to be made in 2023. All right? So let's go here. 568 minus 498. That's 70 more days until we get to a position where we are going to elapse over the 2008 great financial crisis, which means that's around, you could take 70 days divided by 30. That's about 2.3 months. We're in November. So by January, we should somewhat, if the trend breaks, it should break by 2024. Now, something tells me this might be a little higher, right? Even way higher when the Paul Volcker was the chair of the Federal Reserve here, right? So all I can tell you is we are nearing the upper echelon of the resistance bands of this inadequate price chart movement for the Russell. Now Chamath is getting freaked out they're all saying, hey, man, this thing is looking like it's going to continue going over. And who knows, it might. But the difference between you and Chamath, you guys are more powerful than Chamath is. Now, you might be looking at yourself. You might say, Al, I think Al's like smoked a lot today. What do you mean I'm more powerful than Chamath? Listen, guys, Chamath, David Sachs, a lot of these folks, they have a lot. The really only person who has true autonomy is Michael Burry. He's the one that can pretty much practice and do his own fund. And his fund's not that big, honestly. But a lot of these folks that build hedge funds, which is what, they really need to, they're tracked on a year-by-year basis rather than by a 5-year basis. And they really have a lot of pressure. Like sometimes they have to sell because they don't want to sell because their liquidity gets hit. The beautiful part about us is that as retail investors, the only person you have to explain yourself to is your wife. You know what I mean? So that's it. That's the only client you have right now, right? Or your husband, right? Yeah, I see you. I see the data. There's about a couple of women that watch this channel. That's awesome. Unless you're watching through your wife's YouTube. But let's go on. I digress. Let's go on to another one here. The total return for small caps hasn't seen a high for 2 years. And we wanted to, because I was a little curious with this data here. I was a little curious. I wanted to go a little deeper and I just wanted to look at small caps in general, not just to Russell 2000. And if you look at it, if you were to draw a line here for the average, it's around 500, right? But there are some aberrations. 787 days, the Boeing 787. And then we have 1,000 days, all right? 1,000 days, ladies and gentlemen, right? I'm going to take you to the promised land when you guys are all old and gray, right? So what this basically means is, let's say, there's nothing like the Great Depression. God, there's nothing like the Great Depression. But let's assume it's going to take the Great Depression to, the amount of time it took for small caps to win. As you can see, this big dip. And it took time. It really took a lot of days to get there. So let's see how many days we have left. So 1053 subtracted from 498. And again, this is real data. I mean, I'm not making this stuff up, right? So 555, that's 555 days left. That's one of my students. I don't know why he's popped up. I don't know why 555 is his number. Okay. Let's see here. And then let's go ahead and do 31. That's about 17 months, or, we could just do divide by 365, make it easy. Why am I? Well, that's about 1.5 years, right? So we're talking based off of this, it's currently 2023. Let's add 1.5. We're looking at 24.5. So let's round up 2025. I'm thinking 2026. So if we're adding another year. I used to think 2025 myself, but 2026 potentially, worst case. But we should see some proof of concept regarding stock prices in 2025. But overall, I hope this data is helpful just to give you some analysis, like what to expect, the expectation. Again, it's the psychology of money. Now, somebody asked me, any predictions for Clover Health? Yes. So again, we're all data backed, right? We want to be backed by data. And so if we were to go here and hide this and type in, this is our stock terminal. If you would like access to the stock terminal, you can get it in the monthly, or you can get lifetime access by purchasing our mastering and bundle courses for $1,000 off by using the coupon code Black Friday. All you have to do is type in the code, which is /DD earnings movement, and it's going to give you the earnings movement based off of the options price. You enter this, and it's going to calculate it, and it's going to show you, this is for Clover Health. It's going to show you the straddle cost, and then it's going to show you the average earnings move. Then it's going to say the last earnings move. Remember, the stock last time pre-moved before the post-earnings move, hence why it was smaller. The next earnings move it's saying it's going to be 10.62%. But again, you have to remember, I did this analysis yesterday, and the earnings it calculated 19.88%. Now, again, you might say, why is it changing? Because it accurately measures it based off of the options, and the option chain is changing, right? So we should expect anywhere between a 10 to 20% move. So if you go ahead and go to Clove, and go to its history, we're at what, 90 cents? So a 10% move should be around an 11 cents gain, which should, based off of today's price, put us at around over $1. Or it could be a 17 cents move around almost like a 19% gain. But again, we'll see, and it's all based off of the earnings. But like I told you, if stocks truly run on fundamentals in the short term, then we would have gotten some really good returns immediately from that first month analysis. But as you can see, the returns here are actually quite abysmal, right? Which essentially, should tell you that stocks are not moved by fundamentals in the short term. They're moved by manipulation. In the long term, they are moved by fundamentals. This short-term versus long-term movement is actually positive. It's good news. Yes, people can cry about manipulation, but I'm not. They're not. People that been in the market for a while, we actually love those. We love manipulation because it gives us time to find companies that we believe in, find their fundamentals and intrinsic value, purchase them at an incredibly low intrinsic value calculation rate, and then wait until Wall Street moves the money in, and then sell to folks that believe the stock is great because it moved X amount of percentage points in the past, because obviously past performance is indicative of future. That's a bunch of crap. But again, if you guys want to learn about this, you guys don't have to look at what we offer, but you guys can read about what intrinsic value is. Here's the equations. I mean, it's taken me 10 years to learn this, and I just want to distill it down to a course that you can take and you can learn. But if you can look at the intrinsic value graph, I mean, it's pretty much simple, right? Stocks go up and down. What's the value? This red line is the value. How do you calculate that value? Use an intrinsic value calculation. And then once the intrinsic value, you calculate it, and once it's below that, your buy zone's here. And then the larger this is, that's your margin of safety, aka your discount rate, right? On top of the margin of safety. See, the beautiful part about doing an intrinsic value calculation is we go in and do the value, and we draw these beautiful lines. When we do the intrinsic value, think of these bases, the bull, base, and bear and recession case level. Think of it as different ways sending up laser beams to figure out what is this value of the company. And obviously you want to take the lower value as your god, right? So and then hopefully the stock is under that, and that would be the margin of safety. So I hope that makes sense. And I just see a bunch of these pictures to drill home the point for you guys, because it really is important to really understand this, right? This whole concept of intrinsic value. All right, ladies and gentlemen, I hope that was helpful. Again, drop a like if you do love our content. Again, we're not all about fancy stuff for YouTube. We want to give you hard data. We want to give you data. This is some good data. We want to give you some research. And yeah, this stuff takes time, and maybe I need to present it in a better way, but I don't have time to make it look sexy for you guys. I just tell you how it is, and some of you appreciate it, and that really makes my day. I'm trying to balance a career and helping patients, and then when I come home as my hobby, it's coming home to you guys and talking to you and having a good time. And I don't drink alcohol, to be honest with you. I drink my coffee and my cardamom. It makes me happy. Yeah, I think in the next couple of years, we are going to see some proof of concept with Clover, and I can only imagine how we're going to feel 5 years from now. We're going to be happy. We're going to be happy. We're going to be a lot richer, and it's going to be good. And it's hard earned work money. I mean, this is some hard earned money. It is hard to buy a company. I mean, you look at this. How hard is it to buy a company that's down this much? I mean, you really have to see something here. The market's heavily mispricing this. There's a heavy misprice. This is a heavy mispriced here, right? So yeah, let's take advantage of this and let's do it. And then hopefully one day we might have the privilege of becoming a somewhat sized version of Humana. They beat earnings recently. I think they beat flags higher medical costs could hurt 2024 profits. So I'm gonna have to read this to see what's going on with Humana, but they did beat. But I'm gonna double check. All right, ladies and gentlemen, I am fearing. I want more dry powder for all this fear. Absolutely, absolutely. All right, folks, pleasure as always. If you want to support our book to help out our nonprofits, we have it down in the link description. Our top selling intelligent investor for the modern reader. We are selling copies every single day. Holy moly, we're selling a lot. It's one of the top 100 bestsellers on Amazon for stock market investing. And I'm very excited for you guys to support our mission. As always, it's always a privilege and honor to be part of your guys' routine and stock market information. I'll see you.